Welcome to this episode of Money Matters TV. I say it almost every time, but this show promises to be a great one. We have our guest today is John Mason, and he's with New Finance, and he's going to be talking about cryptocurrency with us. And in the meantime, I am joined by Ken Jordan of Round Point Mortgage. Hey, Ken, how are you?
I'm wonderful, Kelly. How are you?
I am doing great, thank you. Beautiful day here, so it's that you can't beat that.
That's true. That's true. Nice autumn afternoon.
Absolutely. So you are in our mortgage world. You have your
Yes.
finger on the pulse of things that are happening there. I can't think about mortgages, housing in general, without going to the moratorium that's been on rent and affecting landlords and renters since we went into this COVID pandemic. So I feel like we should probably talk a little bit about that today. And are there some things that you could enlighten us about?
Sure. I mean, absolutely. It's a very timely topic, especially in light of the fact that, the Supreme Court just recently lifted the federal moratorium on renters or evictions just recently. And, the thing about the eviction moratorium is, what you have to understand first is where did it come from? And it dates all the way back to the beginning of the pandemic.
Right.
If you remember, the CARES Act quickly addressed the ability of folks who were furloughed or laid off or lost their job, self-employed businesses that couldn't operate, quickly addressed their ability to pay their mortgage payments by offering opportunities to go into forbearance with their mortgage companies, and the mortgage companies were all willing to act quickly without very much oversight,
Right.
at least on the front end, to act quickly and offer these forbearances. But then the question was, what about renters? And it was a real quandary, because obviously you want to try and provide the support that you can to the folks that need it, but really you're going a little further along. And when you offer eviction moratoriums, which is really the recourse a landlord has to make sure that the tenant pays the rent, we create these eviction moratoriums, and the tenants are not paying the rent. Now the landlords are, in some cases, unable to pay their mortgage, in which case, the mortgage companies are still in a difficult situation, and they're offering forbearance, on those items. But the eviction moratorium that seemed to a lot of people was necessary. People did,
Right.
They were impacted, and most of the impact was on the lower end of the rental unit spectrum.
Sure. I think which would dovetail with what we saw with a lot of the frontline workers and retail and people who were really impacted right away with furloughs, with layoffs. So I think that makes a lot of sense. Do we have a sense for what size of an issue we're talking about here with any of this? I mean, I'd be hard pressed to tell you, even to guesstimate how many families rent today versus, over historical trends. But are there other issues around data that might help us understand a little bit more about what's happening?
Home ownership rates are relatively high right now, so that's a good thing. As far as the number of renters and the impact that it's going to have, the difficult question that we're all facing is what you just said: is how big of a problem is it? And I found this to be one of the biggest eye openers, is that unlike the mortgage business, where it's pretty simple for mortgage companies to keep track and report those loans that are in forbearance, it's a lot more difficult from a systematic standpoint to collect data from landlords and property managers to determine who is behind in their rent. And we're getting estimates anywhere from, total back rent of 5 to 8 billion in some estimates, to as high as 52 billion in other estimates of back rent. That's an unbelievable spread.
Yes.
So we truly don't even know what the reality of the situation is as a homeowner, in the real estate industry, of what the true back rent situation is.
And I would imagine some of that may be because who are the landlords today, right? Are these individual landlords as opposed to companies where you think of, rental, like, apartment complexes, but is
Mhm.
it more that there are a lot of individual investors, and is it harder then to collect that data from them because they don't have the infrastructure, the reporting infrastructure? Or am I off base with that?
No, no, that's a big part of it, and I think the other thing to consider is demographically speaking or geographically speaking.
Hmm.
Obviously, we're going to see more property management, big companies, apartment buildings, apartment complexes, in more urban areas, whereas in more rural areas, you're going to see the individual property owners,
True.
and the smaller landlords, maybe people that own 5 to 10. Anecdotally speaking, in talking to the folks that I know that are landlords, and being in the business, you just kind of come across people that are renting or own properties that they rent out. Believe it or not, what I was finding is that a lot of tenants, much like a lot of borrowers, they were still paying their rent. And I
Mm.
think that by and large, the $25 billion that was released with the first first coronavirus relief bill, the other 20,
Right.
which was strictly for renters, and the other 25 billion, it did a lot to make sure that people had the resources to continue to pay their rent. Let's face it, though, there are some people that we either A, truly impacted to a higher degree as a result of the
Right.
pandemic, whether it be illness and or job loss, or B, we're taking advantage of the situation. I mean, there were a lot of
Hmm.
homeowners that took advantage of the situation as well. They took the forbearance. They didn't really have a financial hardship. And when the
Right.
when the when the when the time came for them to come out of forbearance, that's when the mortgage company said, "Okay, here we are 9 months later. Tell us, why did you need this forbearance?" And if you didn't have a reason, then there was a good chance they were going to say, "Okay, well then you need to come up with this money now and settle up on your back mortgage."
Right.
I think that happened in the mortgage space, but I think it also happened a little bit in the rental space. And when the moratorium lifts, I think we're going to see folks that never stop paying the rent, folks that
Hmm.
stop paying the rent, but were able to kind of set the cash away. Maybe they were just nervous, and then
Right.
there's going to be folks who squandered the opportunity and really didn't need it. But I think that those are the ones where there's not going to be a whole lot of sympathy in the courts for once the eviction processes start.
Right. And it's challenging, right? These are complex issues, and they do impact the broader market. Thinking
Sure.
about these individual landlords who are holding mortgages on the places that they're renting, right? So there is that ripple effect, which, you know, takes my mind into a strategy around, of course we can always make it better, right? We have to decide we want to make it better. And then it is about coming up with, how do we create a shared vision around something, and what's the systemic change? And it sounds to me like there's a lot of stakeholders in this. And I'm hoping that, another kind of a silver lining, but something that might come out of this in a positive way, would that be that maybe we're going to take a broader look at this, a more in-depth look at this across the board, so that we don't run into the similar issues should something like this happen again in the future.
Think about the relationship historically between landlord and tenant. It almost has a a natural adversarial kind of
Hmm.
relationship, when really it should be a partnership. It really should be.
Absolutely.
And I think that if there's one thing that we learned throughout this pandemic, is the folks that were open, honest with their tenants, and the folks that were open
Yes.
and honest with their landlords, those relationships, it was those relationships that kind of created less turmoil in those lives. And I think that, same if you were with a property management company. I mean, the property management companies, they're businesses. Do they have the deeper pockets to absorb losses? Of course they do. But do
Hmm.
they also have the resources to make sure that they're a for-profit business? They're not the ones you want to be against necessarily when the dust settles.
Right, right. Well, you bring up an excellent point that I use a lot with strategy, right? You have to identify what works. So thank you for putting your finger on that, where the relationship is open, transparent, there's a sharing of information. That's a good place to start. And maybe that is a springboard for others who to rethink the relationship that they have and see that the benefits that come with that over the short term and the long term, and when we face really severe crises like the one that we're facing now. So thank you very much for that, Ken. I really appreciate it. And if you're up for it, I have another question for you. And this one comes from one of our viewers, Lance Edwards in Philadelphia. And he wants to know, what's an origination fee?
What is an origination fee? There's a couple things you need to know about origination fees and the origination fee. So an origination fee is a percentage of the loan amount that's charged by the lender that does not buy down your interest rate. It's simply just a percentage charge, and typically 1% if they're charging it, 1% of the loan amount. But where it gets confusing is that origination fee gets coupled with some of the other operational fees, such as underwriting fee, processing fee, and to combine, they become what are called adjusted origination charges. And that's really the label you want to look at when shopping for a mortgage and you're looking at your loan estimate. You really want to focus on the combined adjusted origination charges to see exactly what that loan is costing you at the lowest level. Now, you're going to be paying your interest rate back. Of course, you have third-party charges. You have charges that the bank, the lender does charge for appraisal, that it's a carry-through charge, and you have your title insurance, which is totally third-party. But if you really want to know what the cost of your loan is, you want to look at your adjusted origination charges and your interest rate and see how it compares to other offers.
Perfect. Thanks, Ken. Lance, I hope that was helpful to you. And for our other viewers, if there's a question that you'd like to send in to Money Matters TV, here's how you do it.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Welcome back, everyone. And now we're joined with our guest this week, and he is John Mason of New Finance. And he is here to talk with us about a topic that has intrigue and mystery built right into its very name. It's cryptocurrency. So welcome, John. We are so happy to have you here today.
Hi, Kelly. Again, it's great to be here and great to be working with you.
Awesome. Thank you for that. I love to talk with you. So I've got to get right to the first question. It's Money Matters TV. We're talking about cryptocurrency. So let's start with the fundamentals. John, what is money?
Well, money is information. Basically, money is nothing more than a record of what you have to be kept in something that can be transacted with. And we get into the modern day age where we say, well, if it's information, it must be zeros and ones. And you look at your banking system and the like, and it is zeros and ones. So money is and always has been information. It's just gone through many evolution in order to get where we are today, where we are talking about something that really has no physical presence. And yet it is the keystone of our transactions society.
John, I have a quick question for you. So if I'm holding a dollar bill, the characteristics of that dollar bill, it's paper, it's green, and it has a perceived value. What are the characteristics? What are the other characteristics of money, and how do they fit into the movement of cryptocurrency?
Well, there are usually three characteristics are given to money. One is a medium of exchange. That is, you pay for things with it. And one thing that is important as far as our currency system is concerned is that you look at any dollar, Ken, or any $5 bill, and what does it say on there? This is legal tender, which means that you have to accept it for payment of debt or payment for products in here. A second characteristic is it is a store of value. That is, you can hold it over time, and it will maintain value for it. And so that's very important. And the last one is that it basically allows you to value things in it. And so that those three are given as the major characteristics. Most every cryptocurrency that's coming out now, one of the things it says right off is that this is intended to be a medium of exchange. That is, it is expected to be used for transactions purposes. One of the things I think that gets to everybody is the fact that mostly we hear cryptocurrencies getting the headlines because they are a store of value. You look at Bitcoin and you say, well, Bitcoin was it was $42,000 yesterday, and today it's $45,000, and tomorrow it may be $39,000, and the like. Well, that's a store of value property, and it's not a medium of exchange. And of course, this is one thing that we kind of need to work with as we go along here, because cryptocurrencies would like to become a medium of exchange, but they have to build up trust and confidence in the public for people to use them in order to make payments with.
So, John, in doing that, right, building up trust, being known, right, going to brand awareness, we do hear a lot about Bitcoin and some others, but like, who are the players then? Who are we really talking about? Because we could probably run the risk of confusing it, like, when we use a brand name to describe a product, because they have so much market share. Who are the other players in this space besides Bitcoin?
Well, this is, Kelly, this is one, I think, where one of the real conflicting concepts comes along as far as people are concerned. They focus on the science. They focus on the information characteristics that Bitcoin presents. And the matter of fact is that Bitcoin, cryptocurrencies, they're nothing more than the evolution of history. And in that sense, they're just an extension of where we've been for the last 50 years. The thing is that everybody focuses on the fact that it is connected with technology, and hence they say, oh my gosh, this is overwhelming and everything like this.
Right.
And we have to put it within context that it is nothing more than an evolution of the financial system as it relates to current technology. And one of the things that I think is so important here is that, I mean, I've run 3 banks, and over my running those banks and things like that, I've seen a lot of changes in technology. But, you could say, well, you've got your automatic tellers machine. What big deal is that now? Well, when automatic tellers machines came out, oh my gosh, what's happening here, and so forth. And you know what? There was a large percentage of the people that would not use that new technology because they weren't familiar with it.
Right.
Gee, we heard that before.
John, let me ask you this. I mean, we talk about the resistance to utilize technology, and I wonder the difference this time. And correct me if I'm wrong, but I feel like the resistance almost is coming from the banks, whereas it used to be the technology was coming from the banks, and the population was resistant. Are banks resistant to cryptocurrency? Are they on board with it? What's that environment like right now?
Ken, I think that's a very, very good question, because particularly in the United States, if you look at the banking system, which is supposed to be one of the most advanced in the world, and say, where are they as far as cryptocurrencies are concerned, or where are they as far as payment systems are concerned, I would contend that the United States is one of the laggards in the world. in terms of those particular facets. In terms of the regulators and things like that, the regulators haven't wanted to move. I mean, the Federal Reserve System, the FDIC, and other agencies like that are, if you will, way behind, in my view, in terms of where they should be as far as developing the new system. And so we've got to live with that, and it is getting scary to a lot of people. And I just wrote an article about it yesterday. It's really starting to worry a lot of people that we are moving as we have, and the banking system and the regulators have not kept up.
Right.
And this is raising more alarm. So,
Well,
there's a
John,
real dilemma going on here.
right. Let's think then, how might business help this process move it along? Are there what we would consider mainstream companies then who are embracing digital currency, using it? Is it a double-edged sword for them if they are kind of on the cutting edge of all of this? No pun intended with the sword comment. But, is there someone out there who's saying, we get it, right? Things are changing and we're going to shape the landscape instead of to wait for the landscape to shape us?
Well, there are organizations that are trying, and you find people like J.P. Morgan Chase, Goldman Sachs, and other major financial institutions are taking a look at it and seeing how it fits.
Right.
They are J.P. Morgan, for instance, has even started things not for the United States, but they've started things, for instance, in Great Britain that is
Okay.
connected with cryptocurrencies and the like. So they're not doing it here, but they are moving in that direction. The problem is here is that the system's not moving. But what's going to kick it off? And again, I've just been writing about this in the last couple days. Guess what? These young cryptocurrency firms and others are raising fantastic amounts of money.
Right.
Coinbase just was in the newspaper yesterday. They're going out for $1.5 billion. Just a little bit ago, they went out for $1.4 billion. I forget what their valuation is right now, but these people are raising money. And what else is happening? You look at the paper all the time. Ray Dalio, the hedge fund guy, he's getting into cryptocurrencies. You get Stephen Cohen, again, another hedge fund guy, getting into cryptocurrencies.
There's huge people getting into crypto, and you can even buy cryptocurrency on Robinhood now, and these apps that are readily available. The information is readily available.
Exactly.
And that technology is there. So let me ask
that's
you,
what's changing it.
What's that?
That's what's changing it, is because what's happening in the private sector. I mean, they call this decentralized finance, or DeFi, capital D-E, capital F-I, DeFi. And this is something that people contend it's only come along in the last 12 months.
Right.
But it's coming along like a steamroller. And that is the private sector that is building these cryptocurrencies opportunities. Now,
I think it's important to follow the money.
Just to define this, if I might.
Sure.
Cryptocurrencies usually end up with a payment system from, like, Kelly, if I were writing you a check or transferring money to you, cryptocurrencies, I could do it from me to you directly.
Right.
Payment systems that exist now within the commercial banking system, which is, again, they're doing fantastic things too, but PayPal, Amazon Pay, Apple Pay, and things like that. For me to transfer the money to you, I've got to transfer it over here to some other agency that transfers it to you. So there's a third party involved. So what these
and a fee.
yeah, I'm sorry, Ken.
And a fee.
Well, in many cases, the answer to that is no. And so, I mean, we really have to look at this. But the crucial thing is here, and this raises all sorts of questions of transferring between you and me directly, Kelly. Only people involved. The only thing that gets recorded is the transaction
Right.
on a forgot what the chain, a blockchain.
Blockchain, right?
Okay,
Right.
but
And you have to have your key.
and you have to have your key in order to be able to do that.
Right.
So, but that, one of the questions there is information. They've got all that information on you and I and things like that. And private citizens may not like that. Secondly, how do you build up trust, particularly for a medium of exchange? Well, you build up trust by having the financials or the support in order to do something like that. Federal government, does that get involved in it? Well, no. One of the things that so many people like about this is that this is free and clear. This is libertarianism at its extreme, that basically you've got a private creator of a financial asset that you can transfer between people. Wow.
So
Now,
it's no
let me just say,
surprise.
historically, banks have issued their own currencies in the past, so that you, for instance, J.P. Morgan Chase, they haven't, but say in the past, J.P. Morgan Chase could issue their own currency and run it against a U.S. dollar. So that was the thing. But this is a private world that we're talking a lot about. It's a private world controlled by private citizens and private money. Now, there are public ones. I'm sorry, there's just so much detail about this and so forth. You get El Salvador. Just the other day, El Salvador issued a national currency that was a cryptocurrency.
Cryptocurrency, right.
China has a digital yuan that they're going to put out. It's going to come out at the Olympics that they're hosting, the Winter Olympics that they're hosting this year. So they're going to introduce to the world a national currency that is electronic and so forth. So this is the public sector. This is the private sector. You see what I mean? There's so much going on here, and so much is connected with technology that it becomes overwhelming in terms to try and absorb this. And then I go back and say, well, this is just nothing more than the evolution of the system. This is
true. Very
the
true.
way we've been going. This is the way we're going to go.
I hate to interrupt you. I think we're going to have to bring you back for another show, because I'm sure Ken has more questions. I have more questions. So
let me just say one thing. Can I say one thing?
Sure.
Cryptocurrencies are here. They're going to stay here, and they're the future.
Awesome. Thank you for that. You heard it here first. And thank you for joining our show today. And our next episode, we have Dr. Glenna Crooks, and she's with the Strategic Health Policy International Incorporated. Also, sounds like a very interesting show. So please check that one out. And again, thank you for joining us today. Thank you, John. Thank you, Ken.
Thank you, Ken.